Okay, guys, thank you so much and welcome to Give on Live's new series, DeFi Tuesdays. So we want to take this time to really give insights into this new digital economy, or the old into the new, and COVID-19. So just wanted to give 1 second to explain the platform mission, just Give on Live, okay? Let's just watch a video real quick. All right, guys, we're just gonna watch a quick video. Right here on giveonlive.com. Okay, there we go, guys. So we've been in various hackathons, and this is the project that we have come up with. It's basically like a Wikipedia for free live stream content, and this series is part of the mission to educate the people.
The COVID-19 world pandemic.
Do you feel like going to the theater, your local cafe, attending a concert? Not possible. There's a second pandemic, social distancing. Right now, millions are struggling with anxiety, depression, and loneliness. How can you share a virtual hug? Give hope to survive this pandemic. The key? An interactive guide connecting humans. Enter Give On Live, the home of livestream. Our mission is to gather livestream in one place, a portal that fosters connection between humans. Thomas, hip-hop dancer, was laid off from a Brooklyn studio after New York City lockdown. Thomas posts lessons online, earning by streaming on YouTube. His dream, 100,000 subscribers. He's just as good as Usher, but nobody knows. Tara's an exchange student, quarantined in Milano. She already binged her Netflix shows. Hip-hop dancing is the one thing that she loves. But videos aren't the same as dancing with friends. She's given up. She signs up to Give On Live's daily livestream guide. Next day, she finds Thomas in her inbox. Brooklyn moves. Thomas is a Give On Live creator now, receiving donations from more and more fans. Tara joins his dance live, practicing and chatting virtually with new friends. She finds more interactive live streams and adds to her calendar. Great, Tara. We'll remind you when to get live. Entertainment that actually talks back. Live streaming is already the new norm, and we've given it a new home. Zoom jumped 200 million daily users. Imagine what that means for our potential revenue. Stay tuned for premium subscriptions. Behind closed doors, we are still social beings. We need to experience each other. Sharing our culture is what makes us human. Give On Live tech superheroes bring positive engagement into every home. Stand apart together with your livestream guide.
Okay, thanks, you guys. Yeah, so that's the mission, and you guys are contributing to it by giving live, giving of yourselves and of your talents. So yeah, don't want to, no further ado, would love to have you guys introduce yourselves and just, yeah, welcome to the Players Club.
Good to be here. Hey guys, David Johnston. Been in crypto since 2012. Seen sort of all the early protocols. Most people know me for dApps, so coined the term decentralized applications back in 2013, and sort of been doing dApps and DeFi ever since. So glad to be here.
Everyone, my name is Corey. I'm the CEO of Stably. We are a SEO-based fintech company and also a stablecoin company. Our first stablecoin, USDS, is listed on Binance Bittrex as well as other decentralized protocol like Kyber. And currently we are focused on creating enterprise solutions for stablecoin as a service clients. And I think I first got in this space back in well, I bought Bitcoin for the first time ever back in 2013. I didn't hold it though, like most people, I guess. And it wasn't until 2017 during the second bubble that, you know, I made some money again with crypto. And then that gave me enough funding to leave my job. I was a data analyst at PitchBook. And I started fundraising for a seed round for Stably. And ever since then, we raised $3 million so far. And we're making great progress, and yeah, glad to be here.
Awesome. I'll go next. I'm Gareth Stevens, based in the UK. I've been in the software world for about 15 years, building various software for a big identity company, crypto related, probably very similar to Corey there. Dabbled in Bitcoin quite early, but yeah, just dabbled. It wasn't until probably 2015, 2016 that I kind of realized what it was and actually started doing it seriously. That obviously turned out quite well. So I'm now left the day job. I'm the founder of Bitcoin Lessons, which is a little app we launched about 6 weeks ago, which is dedicated to educating noobs on what is Bitcoin, what is money, and how they should get on board safely and not just come in for the massive gains when it moons. Actually understand what they're doing so they understand how to hold and not just try and make $1 million in 5 minutes and normally end up wrecked.
Great, thank you, Gareth. Alexander?
Hi guys, I'm Alexander from SFox. So I head up the Asia operations for SFox. SFox is basically a crypto trading aggregator. So we aggregate prices across exchanges as well as OTC platforms. I've been in crypto since 2014 while I was a customer of SFox first. And now basically I'm helping them start up the operations outside the US. SFox, our focus in this part of the world is really about introducing new products, primarily derivatives, as well as margin lending, because primarily there's a clearer regulatory path in this part of the world, and we hope to take advantage of that. Thank you.
Great, thank you, Alexander. So this session is more for the advanced viewer. The next session is going to be for the beginners. Now, the main topic here is entering the digital economy, right? So we are all in the digital economy. We're all tech entrepreneurs for the most part. But now, you know, because of COVID, everyone is forced into this digital economy. So love to get your views on basically what can we do and where is opportunity here, especially for those of us who are already involved. What do you see as opportunities amidst this crisis?
Well, I mean, education is first. I'm glad that the team here is doing Bitcoin lessons because there's just so much education left to do. Most people don't know how to open a wallet, don't know how to navigate an exchange, and what risks to watch out for. I've been doing a lot of the same. I started a 100-day podcast and video cast on YouTube, basically just trying to explain crypto concepts one at a time. And, you know, a lot of it's, you know, we've got time, right? Nobody's traveling, nobody's distracted, there's no events going on, everybody's in front of their computer for like the first time ever. And so, yeah, I think the timing is perfect to get a lot of new people onboarded. And if you look at the volumes, just like the signups are going through the roof on a lot of fintech apps and crypto especially. So I think we'll see that trend continue. And honestly, I think the two things that matter the most are stablecoins and DeFi right now. Because people are looking for yield and like they're getting nothing from their savings account. They're getting nothing from treasuries or bonds. Stock markets are all down. So people are looking for an alternative. Like this is our golden opportunity to onboard as many of those people into DeFi apps where all of a sudden 7 or 10% is an incredible return and sounds really great. So that's what I'm spending most of my time on.
Excellent.
Yeah, to add to David's point, he mentioned that, you know, stablecoin is definitely a opportunity right now in the COVID day and age. There's been a recent push to use less cash because cash is now considered quote unquote dirty money where it could transmit the coronavirus. So a lot of people are now, actually we have a lot of enterprise clients that are coming to us and trying to work with us to figure out a solution to integrate stablecoin technology into their existing ecosystem or payment processing system so that you know, they can help some of their clients gradually switch from, you know, using cash to more digital based methods of payments.
Interesting.
Primarily involving stablecoins.
Yeah, I never thought that, you know, fiat is kind of a dirty term for us in crypto, but literally dirty, you know, virus infected cash.
Dirty.
That's a new, That's a new twist.
I think fiat is still a dirty word, but it's the onboarding for most early users. It gets them into the crypto economy, and then they're one step closer to using Bitcoin Cash or Dash or Ethereum or whatever their favorite token is.
Great, guys. I have another. So on this cash and digital cash, we had the stimulus in the United States, almost had those central bank digital coin. What do you guys feel about that? Do you feel like that's going to happen at some point? What are your thoughts?
Oh yeah, it's inevitable. Like if you guys read the Financial Stability Board recommendations that came out last week, like they're basically saying here are all the global regulations for stablecoins that are centralized, and then literally the next day Libra was like, okay, white paper 2.0, here's exactly how we're going to comply. And yes, we welcome any central bank digital currency to issue on our platform, and we'll switch our reserve from an account to the central bank digital currency. So to me, I think it's coming faster than I think people expect.
Yeah, the thing I question is just how's it going to differ from what they've got already? Because they're still going to want the infinite printing machine at the other end. So they're not going to actually comply to the scarcity of the whole point of a blockchain to make sure that the founders don't just print loads more of that coin. They're going to want to be able to print more. So I'm not really sure, like, okay, they'll put a portion of the dollars or the portion of the yen or whatever currency they're talking about on a blockchain, and then they'll just add more and as and when, and it'll act and form exactly the same as what the currency did before. It'll be hyperinflated. You can be seized at any point. It's just, I don't really get it. I don't get it.
That's it. It's kind of lame. Like they've turned stable coins into exactly what fiat currencies are today, which is unknown supply, right? Ability to freeze. Everything's KYC, AML. I mean, if you read the new Libra white paper, they still have language in there about, oh, we're going to bank the unbanked. And I was like, what are you talking about? Like, I read all of the things you're going to do. There's no way those people are going to qualify. The people that don't have an ID, people that don't have a permanent address, the people that are already unbanked, there's no way they're getting Libra currency, right? And what the regulators have effectively forced Libra into is now they're going to have Libra dollars and Libra euros and Libra pounds. So they're going to individualize the currency to the citizens trapped in that jurisdiction. So you're not even getting the interesting basket of like currencies all together that they proposed originally. And even the basket element, which they're keeping around for those developed countries that don't have a digital currency yet, so kind of them. They're going to ask the IMF to set the currency weights for the Libra basket, right? So yeah, I don't think, effectively it's just payment rails for central banks. Right. Is now what that has become. But here's the thing. People want the unit of account they're already used to, that they pay bills in, that they owe salaries in, with the finality and speed of a blockchain. So I think there's going to still be a lot of adoption. It's just you're not getting a different monetary policy. You're getting the same old central bank monetary policy.
So at Stably, our take on this is, we're going to see many different generations of stablecoin. Right now, we're still in the very first generation. In fact, we've been in this generation for like, I think the past 5 years now. And I'm speaking mainly about fiat-backed organic stablecoin or asset-backed stablecoins. I'm not talking about a decentralized stablecoin because those are kind of like a different dimension. But in terms of organic fiat-backed stablecoin, we're still in the first generation. And what is it? You have a token that's backed by fiat reserve, is audited. Well, in the case of Tether, it's not so much there. But for most of the other respectable players like ourselves, the reserve is audited. We maintain full transparency on all the practices surrounding issuance and redemption, as well as we work with regulated partners in order to launch these products and bring it onto the market. So these are very, first generation stablecoin. What we envision, getting released going forward in the future, maybe 1 or 2 to 5 years from now, is a second generation of stablecoin, where we call these utility stablecoins. where they still have all the same characteristics and properties first generation. However, due to the nature of stablecoin being programmable money, we believe that the market will eventually, entrepreneurs and maybe even central banks, right? They will start programming additional utilities and features onto the smart contract through stablecoin. For example, interest payment, credit score, some sort of discount or reward or cashback or loyalty point that is particular to an ecosystem, a business ecosystem. And as a part of that, central bank digital currency is actually part of our vision as well. So we position our business right now to adapt to the future release of CBDCs. And especially if the United States government, if they release a US dollar CBDC, they're proposing it in Congress right now. Next year, they said they want to potentially give every American a $2,000 a month stimulus, and that could potentially be payout in Fed coin. So we'll see how that goes, right? But if Fed coin does get released, Fed coin will be we don't have full details on what it is, but my guess is it will be very basic. It has certain generation 1 stablecoin like features, and then businesses like us and other people are going to start wrapping around those CBDCs, right? If those CBDC is built on a blockchain, then we can do like an on-chain wrap, and then we can build additional utilities and feature and function and benefits onto this wrapper around the CBDC. If that CBDC is not on-chain, and if it's some like private ledger system again, or some system that's not Ethereum or Binance chain or Stellar or whatever, right? We can still have a regulated custodian take custody of the Fed coin and issue like an Ethereum version of it, and people might just prefer the Ethereum version still over the Federal Reserve version. Who knows? So we got to see how the market's going to evolve, but how we position ourselves stably is we're very flexible, and we're very adaptive to whatever changes might come.
From Alexander, I know that SFOX has been in the game since 2014 and very picky about which matching pairs to list. So love to get your opinion on what you think is coming and how you think maybe you guys will handle this.
Well, first, if I can just start off with adding to what David said earlier about Libra. I think the most interesting thing about I'd say the most disappointing thing about Libra moving from a basket of currencies, fiat currencies, to single currency units is that it takes away the disinflationary impetus that we've historically seen from basket currencies. Two real life examples of this. Number one, there's my domestic currency in Singapore, which basically operates monetary policy as a basket of fiat currencies, as well as the EQ, the economic currency unit, which was the precursor of the euro in the European Union. And both of these currencies were basically able to bring about really very strong disinflationary impetus on a macroeconomic scale. And because it was creating a competitive dynamic between different currencies to keep within certain economic indicators. So bringing that to Libra, if Libra had a basket of currencies, this would have mitigated somewhat the issues that we all have with fiat currencies, that i.e. the printing press can run indefinitely. And by moving to single currency units, unfortunately, that incentive is gone.
Yeah.
So just going back to your question directly, Chrissy.
Yeah.
What we offer at SFOX has always been the most liquid currencies. We are a trading aggregator, and we do look to exchanges as well as OTC. So we're basically looking as you can say the delta in what they trade. We are also taking their prices from them. Now, to me, I think what's more important than rather going into breadth of cryptos that we can trade, I'd rather go into the depth of cryptos, i.e. what can we do with the existing cryptos? Obviously, as a trading platform, we don't really program smart contracts yet. We're not really looking into many of the technological breakthroughs that crypto can offer. But I like the idea of what derivatives can offer, particularly for, call it the top 10 crypto pairs. Essentially, this allows anybody to properly allocate their risk management profile to how they would want to see crypto, how they want to see their crypto payout evolve. Hong Kong yesterday approved the first retail-based Bitcoin fund. And whereas we've seen the SEC basically say, reject all ETFs constantly since 2017. And we'll never know, frankly, at this point, I don't know if they're ever going to approve one. And this to me is just indication that there's really a larger play here in terms of regulatory arbitrage, some might call, but I just think there's different views in jurisdiction. So to sum up, I'm not so much interested in the width of cryptos right now. I'm just more interested in going in depth. That's our key focus.
Nice, nice, very, very interesting. Yeah, and you mentioned a good point about regulation, and I would love to hear, two of you right now are physically in Asia, and then, one is in the middle, and two of us are back here in the States. So quite international. I'm curious what you feel about what's the pulse now with, how it started and crypto being way ahead of regulation and regulatory systems and licenses and such. What's the pulse now in the market?
I can have a go at that because I used to work for an identity company that used to actually, does sell KYC and AML. So when all the big exchanges launched in the UK, our actual default policy as a company, this is back in 2014, I think it was actually not to even sell them the product because the general that we were a publicly listed company and we didn't want to enable money laundering and people buying drugs. That was literally the mindset. Now, luckily I was there and into Bitcoin myself, and I managed to persuade the board at the time, no, we need to get these guys on board, and they signed Kraken, Coinbase, and all those guys. 5 years later now, they're some of the biggest customers of my previous company are crypto exchanges. So it paid off massively. So just in that little microcosm there, it's gone from being that's barely an industry we even want to make money out of because it's probably going to cause us too many problems from the regulators later, to now people are fighting over it. They completely know that the kind of the dark side of it is just a tiny piece. And in reality, if you're selling KYC and AML to a bank, then that has just as much dirty money running through it as well. Those people are not all angels. So in the UK, I think it's a complete revolution. And now just crypto, Bitcoin, all that is just seen as it's a legit business. Sell them whatever you want, and it's going more and more mainstream, and it's less of a niche, and just it's just a core, just as you would sell a piece of software or a bit of regulatory software to a bank. It just now also applies to a crypto exchange with barely any caveats, so it's light and day in the UK over the last 5 years.
Yeah. No, I would agree with that. I think, effectively we're going to see a great bifurcation, right? Either you're going to be a regulated stable coin, like you said, that meets every standard a financial institution does today, or you've got to be completely decentralized. Yeah, you have to have no custody. You can't be collecting fees. You can't be a middleman or an operator. I mean, if you read the guidance, part of what Libra got stuck on is the regulators wouldn't even accept a chain that didn't have known validators. So if you can read the tea leaves, it's pretty clear at this point, they're going to push all regulated stablecoins to something like the Libra blockchain, which now have said they're going to get rid of the permissionless roadmap and have known validators, and they're going to stick with that because they can't convince the regulators otherwise. So you're going to see USDC and all the others that are regulated move on to either the Libra blockchain or something else where they have known validators. I mean, that's really hard to get around. Maybe somebody will spin up an Ethereum fork that's private and has known validators or something like that. Maybe then you could port a lot of the infrastructure, which would be really nice. But it's going to be interesting to see how that evolves. So one of the projects I've been tracking, PegNet, is on the opposite end of the spectrum. Is this first stablecoin network to do mining-based oracles and consensus. So there's no company, there's no middleman, there was no ICO, there's no pre-mine, it's just open source, and miners are reporting the data every 10 minutes for top 20 fiats, top 20 cryptos, gold and silver, all 42 assets in the network. So you guys were talking about derivatives, and that's exactly what this is effectively, is a synthetic or derivative that the user can self-issue. It's in their own wallet, and then they can convert it into any other crypto or fiat exposure that they want. And that's really interesting to me because it effectively is the other end of the spectrum where I think Tether is going to have a hard time. I don't see how they're going to become regulated, and I don't see how they pivot to decentralized. So the question is, where does that market share go as exchanges in different jurisdictions start shutting down those pairs? I think some of it goes to the regulated side, and I think some of it goes to the DeFi side. But it's going to be very fascinating to watch.
Great, great. Yeah, it will be fascinating. So now, you know, everyone here are business leaders and with your companies. I'd love to talk about what is it going to look like to serve a more global audience? So we are all connected now, even more so with COVID and sending everybody home. What is it going to look like? How is it going to change your business? How is it going to pivot your strategy? Love to get your thoughts. And maybe, you know, there's going to be other business owners listening on, and there's other people asking these questions now. How can you pivot in this crisis time? Anyone?
I can go. I didn't want to go first again, but I can go. Because well, basically our entire strategy was going to be events. They all got cancelled. So that was just awful for us. But straight away, we had a social media strategy. And when we've been looking at it, actually all the traffic for social media sites has gone up hugely, as you would expect, because everyone's sat at home with nothing to do. But all the companies, or there's a portion of companies that have stopped spending. They've cut their marketing budgets. So traffic's gone up, spending's gone down. You can now get a bigger bang for your buck if you advertise now. The eyeballs are there and it's cheaper to get hold of them. I must admit, I have spotted that some of the traffic is, people really aren't in the learning mode. I really hope people would be in the educational mode. There's a lot of people that are downloading the app and they're not getting very far through it. I think people are just, they're just, I don't know, I think they're busy doing TikTok videos more than actually learning something that's actually going to help them be productive, unfortunately. But I am getting some great feedback. I think the one actually unexpected branch that we got is once COVID happened and everyone was locked in their homes, and once parents were homeschooling, we put out an offer to go, look, anyone homeschooling their kids, Bitcoin lessons is free. We had a great reaction to that, and people and mums and dads from all over the world were messaging in going, unlock our app. And we've had kids as young as 6 complete Bitcoin lessons all the way through. And it's got quite a lot of economic theory in it. And the mums were just like taking pictures of their kid, like learning Bitcoin lessons. And there's a little Bitcoiner. It's and really they were in Japan. There was this family in Japan, and this little 6-year-old Japanese girl completed Bitcoin lessons, our youngest ever completer of the app. And so yeah, I think it's probably down to anything. It'd be adaptable. You know, our entire strategy 6 weeks ago, we launched just as lockdown happened. Our entire strategy that we had went up in smoke. I did one event and then got back and it was all cancelled. So we completely pivoted to a different one and it's working. So
yeah.
You got to listen and market, my friend. TikTok videos. That's in all seriousness. If you can get it down to like 15, 20 seconds, you're in.
I totally agree. I have been practicing my TikTok, and my game's not high enough yet. But maybe with a bit more practice, I might be brave enough to do it with the Bitcoin lessons jumper.
That's funny. What about SFox?
Yeah. So the nice thing about starting or being last is that everybody has said the good things first, so I can just round up. Well, actually, I think the first thing I do is I appreciate the fact that we can just hunker down and I don't have to travel for conferences. I mean, this is the one added benefit of this whole pandemic issue.
Sure.
But I think just to give very specific examples of having to cater to a global audience, the SFox was basically primarily a US company up till the end of last year. And we only started our international operations at the beginning of this year. And to give you a specific example, even when we're doing due diligence or KYC on anybody who would come onto our platform, it was so US focused. They would focus specifically on like what phone number you had. They would match it to your company registration if you're using a company. They would try and match it to your driver's license, then possibly a social security number. And this is I'm not going to name names, but this was a rather big a blockchain KYC provider. And when I asked them, like, okay, so what can we do for everybody outside the US? Then they basically said, well, not much on a platform. Why don't you just do an enhanced Google search? And that was basically the end answer of it all. So I do think that there are a few lessons I would say to take from the online banking industry when it comes to KYC and DDQ. So my panelist Gareth is from the UK. I think some of the UK banks have been exceptional in terms of how they do their KYC and DDQ when catering to a global audience, how they accept documents from worldwide, how they verify that the person is actually there, you know, they actually have a video call, they do biometric recordings of your voice, they actually make you hold up your ID and shake it around to make sure it's not a recording. And these were things that were completely alien when I suggested it to my US counterparts. You know, they thought, no, we just take a snapshot of your driver's license and you're done. And so I think really there's sort of going to be a global convergence to better due diligence. And I think it's essentially going to settle on video call. This is really what's going to happen. I think even banks will also settle on video call, because really that's just going to be the gold standard, so to speak. We're going to call it Bitcoin standard in the future of doing DDQ.
Very, very interesting. Very cool, very cool. So I'm now going to open up some questions from the audience. And we have a question. Can you dive deeper into Tether? Is it the Mt. Gox of DeFi?
That is literally what I was quoted in Coinbase saying yesterday, or sorry, CoinDesk saying yesterday. And so, yeah, that's my concern. I've been looking for what is the big systematic risk the last couple of years. And I didn't know what it was going to be, because there's always something that stops the next bull run, right? 2013, right, it was the collapse of Gox. 80% of all users were using Mt. Gox, right? That was painful. I remember those days. But the red flags were there. Like, there was clearly a problem with the fact that they had been hacked. They were operating on a fractional reserve. They were having programming problems. There was legal and regulatory pressure. But people didn't want to deal with it until they finally fell apart, and then people had to rebuild all the world's exchanges. In 17, the writing was on the wall long before the final ICO crackdown at the end of 2017, that regulators were not a fan and effectively forced people either into security bucket or to become fully decentralized, right? So we've seen this before. And so I was like, what's the next thing? Because now we figured out the regulatory thing. Either you're in a good jurisdiction or you're using some other model. And we figured out the exchange thing. There's no one big exchange, but we do have a stable coin that has 7 out of the $9 billion of stable coins, and it's called Tether USD. And I feel directly responsible because I funded the Mastercoin Foundation, which built the first assets on the blockchain, and Tether was one of the first projects to come out of that, right? So I knew all those guys long before it was sold to Bitfinex and sort of became a different thing, back when they were like gonna have on-chain audits and all of these transparency things, right? And it's sort of become this other thing over time. It was the best we could do at the time, right? Just issuing a token and connecting it to a real world asset was revolutionary, but now we have the tools to effectively do something totally different where the user's in control, there is no central reserve, and I think that's the direction it's gonna have to go. So yeah, that's a real serious concern. What happens when exchanges start delisting it and people start selling and dumping their Tether? I don't know. Do they have full reserves? I don't know, right? So this isn't a good situation. So I've spent basically my last 8 months promoting DeFi alternatives like PegNet, because I want something for people to be able to switch to. Like, the trouble was there was no real alternative Mt. Gox, but if we all work together on the regulated side, on the DeFi side, we can build a lot of really great alternatives before that day comes. If you look at the guidance from the Financial Stability Board, they say July 15th is when they're gonna take comments until, and then they're gonna finalize their guidance. And then it's gonna be up to the central banks to implement that. I don't know if that takes them 6 months or 18 months, but in the next year or so, like, this is gonna go from recommendations to legal compliance being enforced in all the world's major countries. So we don't have a lot of time. we ought to be really focusing on this and getting people switched over as fast as we can.
What's your fear then? So you say that Tether has, say, 7 billion of supposed dollars worth of Bitcoin in its coin somewhere. What's your fear then? So if everyone just went and sold their Tether, where do you think, what's going to be the gap? Because with Mt. Gox, for example, it was so disastrous because their fractional reserve of Bitcoin was actually zero. So hence nobody got their money back whatsoever and caused a huge amount of pain for 80% of Bitcoiners. Whereas with Tether, number one, like, so for example, I've never owned Tether and probably never will. So I think it's probably more it's kind of something, I don't know how many people really hold it for long periods of time. Maybe they do. So I don't know, for me, from the outside, I could see it being a scare story, but I couldn't see it in Mt. Gox level of pain. So where are you coming from to see that level of pain?
So if you saw the New York issues that they've been dealing with, what was disclosed in those documents, it was 76 cents on the dollar. So that was sometime last year. And they've claimed since then they've filled in that gap. They ran the Leo ICO and they raised $1 billion and that was enough to fill the gap. I don't know, right? That's the problem. I don't know, right? So is it still 76 cents? Did they fill the whole gap? It doesn't really matter, because the reason there was a gap in the first place is because Bitfinex was hacked. And they used the balance sheet, I guess. That or the assets they were holding went down, one of the two, that created this gap. Think about where we are in a global perspective too. With negative interest rates, it's not making them money anymore to be holding $7 billion. Depending on the jurisdiction, they are paying to hold $7 billion. If they're making zero money, even if they were holding treasuries, those have gone under 1%, they could be losing money every month, every year, and it'll just make the fractional reserve worse. So the problem is, I don't know, right? That's the whole issue. So that's where I'm coming from. And if it is 76 cents and they get forced off exchanges and people literally have to dump it because they don't have any alternative, it's hard to redeem, it's hard to withdraw. So you're just gonna sell it. Does it get too close and people make a run? I don't know, I hope not. That would be really disastrous for crypto. If you look at the trading volumes per day, Tether has passed Bitcoin. It is the most traded crypto on the face of the earth. And it has all these centralized issues. So I don't want to ignore that, and I don't want to underplay that. I'm not panicking. It's not going to happen tomorrow, probably. Who knows? 2020 has been pretty crazy. So if we're like, oil is trading for negative $36, right? Who knows? But I'm not panicking. What I'm saying is now's the time to take action, right? We have so much technology now at our fingertips compared to 2013 that we can do something about it. Whether it's the guys at Stably building a regulated alternative, or the guys at PegNet building a decentralized alternative. I think just people have gotten complacent. Tether works good enough. Yeah, it's probably got some problems, but I'll list it on my platform. I'll use it. Do you know how much work it's going to take to rip that out of every code base in the world as an asset, as a lending instrument? I mean, some of these things are locked up for months and months. How are you going to switch that out if there's a run? The point is, I would love to see stablecoins in a year or two look like the exchanges do today, which is nobody over like 10, 15%. Very distributed, very not a central point of failure. And this is something we've really got to take seriously, or we can all enjoy crypto nuclear winter for a year or two and it'll put the industry back. It won't kill the industry, but man, it'll be a pain.
Wow.
Well, putting my tinfoil hat on here, I've heard conspiracy theories out there that Tether's actually CIA back or something like that. Just because they're still in existence and they're pushing the power of the US dollar into the crypto market, aren't they?
I guess. I mean, they're creating demand for dollars, but I don't think the Fed's care. I mean, you got USDC and 10 other alternatives. They're all effectively licensed banks. I think those will win out. You read the Libra paper? They've essentially cut a deal with the devil, right? They'll give them all surveillance of the entire financial system. They'll never go permissionless. They'll do single currency fiats, and they'll do known validators. So like toss out all the interesting things of blockchain, and we'll just be extension of the central bank. And here's your finality. Here's your cheaper transactions. What they've built is a Visa killer, but it's not interesting from a crypto perspective.
I think it's actually, I mean, for a regulated company or a company that has this operation on U.S. soil or any of these jurisdictions, yes, it's, we do have to abide by regulations and, do what the government eventually tells us to do. But the market at large, right? They can do whatever they want, and regulators oftentimes can't really do anything about it. So, even if all these KYC, AML regulation come out, travel rule, the FSB say this and that, and the Federal Reserve implement this and that, right? Guess what? When this Fed coin comes out, or whatever, regulated token that they issue, or CBDC, people are going to start wrapping them. They're going to start wrapping them. They're going to create like a completely, wrap CBDC or wrap Fed coin version, kind of like wrap Bitcoin, right? And that right there is like, it's not going to be tracked. It's not going to be whatever, right? But it still has that redeemability for the actual Fed coin. So the way that this market is going to evolve is going to be very interesting. I'm Vietnamese. In Vietnamese, we have a saying: the thicker the rind of the fruit, the sharper the nail to open it. So we'll see how this market is going to react to that eventually. To your point about Tether still holding dominance, I agree that we need to see a change here. I raised my company funding in 2018, in April of 2018, on the single premise that Tether is going to blow within like two years or so now. And to be honest and to be frank with everybody here, that was a bad bet for the past 2 years, and it burned a lot of money, a lot of marketing money, a lot of market making money, and which is why now we're pivoting over to making stablecoin for existing brands with a lot of network effect and a lot of users, instead of trying to go out and do this ourselves. Because I'm telling you, fighting Tether is just like it's just been an uphill battle. Very difficult when someone can just mint token right out of thin air, and you have to actually find the full dollar to back it up with, right? Which, interestingly enough, I think it brings to the fractional reserve banking model for stablecoin. I think that's actually going to be the future. I think that 5 to 10 years from now, stablecoin is not going to be back one to one anymore. Perhaps in name only, but the banks that are holding the reserve that are holding the fiat reserve of these stablecoin, they're going to lend it out. And so in actuality, it's just going to be like the current fractional reserve banking system, where every dollar that you put in, they take 90 cents of it and they lend it out. Oh, actually, they just dropped the reserve ratio to like 0, so like they can lend out the whole 100 cents now, right? So, and Tether has already kind of proven that model, right? And they're at 76, 75 cents right now. Who knows if they're actually fully back yet from their ICO or whatever, right? But the market is still trading it at $1. And again, crypto market right now is still not that large. I think I can, at the top of my head, I can name probably like 10 large OTC or market makers all over the world that are the one that's holding up the price of Tether. These guys, they work very closely with Bitfinex and Tether. They get redemption ability from Tether. And so as long as these big dogs don't panic and they don't dump Tether, the market is going to stay, for Tether is going to stay intact, whether or not Tether is going to be backed by a full dollar or not. And let's put it this way: you put your money in the bank lend out 90 to 100% of it. If you're not panicking and everyone else not panicking, that system works, and it will continue to work because there's confidence in it. It's kind of like the same thing with Tether right now. Maybe it's 76 cents, but the market makers and the large OTC, the institutional traders, they're not freaking out. They're still using Tether, and so that confidence get reinforced through the entire market. Now, I'm not here to defend Tether. I'm not saying that they're good or anything. I'm just pointing out that they are sort of a pioneer in the space, and what they have done is just a foreshadow of what is about to come, at least on the regulated fiat-backed stablecoin space. On the decentralized space, that's a whole different dimension. I'm not even like an expert in that, so I'm not even going to pretend. So yeah, that's my 2 cents on the issue.
Alexander, I would love to hear kind of about maybe some things that you've heard with your clients, or basically like the big trader side of this story. What's the buzz with them?
Well, actually, I just wanted to add to David's point first. I think the big issue is that if Tether is going to be the Mt. Gox for 2020, what's the alternative? And the alternative might be there's so much mistrust in crypto that we might turn to a government-backed stablecoin. And we know what's the big elephant in the room, the renminbi issued by China, which was pretty clear was supposed to be issued in February, but because of the pandemic was delayed and it's about to be imminent anytime soon. Now, the issue with having a government-backed stablecoin from a place like China is that a lot of the decentralized features that we love about crypto will be lost in the pursuit of stability from a large economy. And obviously the US will lose out because this will overturn what was basically known as the Bretton Woods Agreement from 1942 during the Second World War, which basically made the US dollar the reserve currency and allowed it to effectively be able to spend beyond its means by putting a defensive shield around the world, particularly during the Cold War. So why do I bring this up? Why do I bring up 70 years of history in the context of this? Because essentially China is trying to become the reserve currency of the world. And if we have a Mt. Gox issue with Tether and people start turning to a government-backed stablecoin, I'm pretty sure the US government doesn't have a stablecoin ready to be deployed tomorrow. We've seen the reaction they've had to even a big institution like Facebook. I'm not saying that I agree with Libra, but we know their reaction. So we know that the predominant stablecoin that might be pushed and might jump to the forefront might be the renminbi. So looking beyond that, just answering your question, Christy, in terms of what are the big trends really for us, I think that for me, it still comes down to the point that we experience so much volatility in crypto, primarily because institutions can't get involved. We've seen that SEC basically refused to allow any Bitcoin ETF since 2017. I think the number of refusals now is well over 20. Could be slightly wrong about that, but I counted it a few months ago. And I think that essentially you're going to start seeing jurisdictions that are not tied to large economies, such as Hong Kong and Singapore, be more friendly towards accepting all manner of participants in the crypto scene. And I think that institutional participation is really the much needed ballast to control the volatility and to level a lot of the criticism against crypto prices, i.e. that they're just way out of control. Although frankly, they perform better than the S&P over the past, in Q1. But frankly, it counters a lot of the issues about volatility that crypto prices face, the pricing dynamics. So that to me is really the key moment. I think effectively, hopefully the halving was going to create some more momentum, and we're going to start seeing institutional players come in, and they're going to come in through jurisdictions that are not so heavily tied to a large economy, such as the US, but to more, I would say, friendly whitelisted jurisdictions such as Singapore and Hong Kong.
Excellent, awesome. Thank you guys so much. So we're closing up the time for this first part. Just to leave off, what would be your one piece of advice for the slightly advanced digital person entering the digital economy? What to look out for? How do you prepare? Maybe what book can you be reading? Some tip for our audience.
I think my number one tip for anyone entering crypto, I mean, the number one thing people talk about when entering crypto is buying Bitcoin or buying crypto, right? Not wanting the price to go up. Dollar cost average. Don't put everything in all at once. Like, I can't tell you that enough, like it's been proven that if you dollar cost average, you don't risk all your money at once, and you can participate and enter the market whenever. You don't need to time the market or whatever. Just put in a little bit of money every month or every week or whatever, and in the long run, you should be fine. I've seen way too many, friends, family, or even colleague in the industry that, oh, Bitcoin just went up 20 or 10% a night. I'm gonna put in all my money, and the next day it goes down like 20, 30%. They're just, stressing. So anyway, dollar cost average is all I want to say.
Good tip.
I'm going to have to stick on brand and educate yourself. So obviously we built Bitcoin lessons. I think it's still, there's a huge amount of people, even if you're very educated in financial markets, if you're new to crypto, start with education. Don't start with buying something and just losing money. It is a quick way to learn, but it's also very painful and might actually prevent you earning more money in the future because you've spent all your money early and you have to earn more money just to pay for the losses. So educate yourself first. You know, there's Bitcoin lessons, there's books, there's YouTube videos. If in reality, if you haven't spent probably at least 100 hours minimum, then don't even think about opening an account upon an exchange and putting money in. And then when you do, dollar cost average in, and you won't even know to do that if you haven't got a history in investing. And if you haven't, even if you have got a history in investing, make sure you're educated in crypto as well. So education, education, education. Just make sure you know what you're doing, and then at least when you make a mistake, you know why you made a mistake. The worst thing can be is when you make a mistake and you got no idea what happened because you got no clue what you're doing.
Yeah, I'll second that and give people a specific URL. Multicoin.capital, I think, has one of the best blogs. This is for more professional investors, hedge funds, others that are getting into the industry. They've got these incredible analyses that they publish that are 10, 15 pages and go into a particular token. Here's BNB. Here's, you know, the thesis around Ethereum. Here's utility tokens. And they're really easy to read and understand. They don't require a lot of technical depth, but they get in depth enough that you feel like you have a good sense for a project. So if you're going to spend your 100 hours, Bitcoin lessons, Multicoin, there's so many resources out there.
Alexander?
For the TikTok generation, I'm just going to suggest a short read of about an hour and a half. So shout out to my friends Bobby at CoinGecko. They just produced a book called How to DeFi. And I like it because it really goes through all the different aspects of how DeFi really works. And they even take screenshots of how you enroll in certain apps, how you do some staking, how you do, just from a very, very basic level so that anybody can follow. So How to DeFi by CoinGecko. And I think it's going to be sold from next month onwards. So it's free now till the end of the month. So you should get it now.
Wow. Well, this is DeFi Tuesday, so I think I'm going to have them on the show for sure. Yeah, let's hook up. So thanks, you guys. And don't worry, everyone, all those suggestions and those links and some of these guys' social media pages, we're going to update it on the comments below. So you guys can stay connected, stay fresh, and let's DeFi Tuesday again next week. Thank you, everyone.
Thank you.
Yes, bye.
Thanks, guys. Thank you.